Hello everyone, welcome to Market Voice. We are seeing the strategies and techniques adopted by SunTzu in winning his wars and trying to see how we can map it to our trading activities. In fact, there are about 13 chapters in his book, The Art of War, from which we are picking each treaty and trying to map it to our trading philosophy. In fact, in his eighth chapter, which is Variations in Tactics, in one of the statement he says, that is the third treaty, which he says there are roads which must not be followed, armies which must be not attacked, towns which must be besieged, positions which must not be contested, commands of the sovereign which must not be obeyed. So these are the things he says in his eighth, eighth chapter about tactics. So how do we relate it to our activity? What we have to understand is we should at all times follow the rules. Certain things we should never do. We should write certain must not do things. These are very important. What are the things that you should never do? Do you have the list of never to be done things in your trading activities? For example, never average out. If you are in a losing position, never average out. If you are carrying forward any position, do not carry forward any unhedged position. So this way, there are certain rules which you should always follow and you should never deviate. So when he says there are roads which must not be followed, which means do not do certain things ever, and you should know what are all those do not do things ever. Have those lists in place which will help you in your trading progression. It could be anything. You might have, based on your experience, based on your observation, you would have decided I will never do this thing once again next time. Maybe not putting the stop loss. You put it as a rule. Next time, any trade, rest of my life, I will not trade without a stop loss. There could be various stop losses, whatever is the stop loss, but you should have some stop loss in place. You might have burnt your hand by averaging one or the other trade. Put a rule, I will never do this once again rest of my life. So these are the things which you should at all times have. The list of I will not do these things. The list of to do things is another set. So when you are making rules, when you're making the setups, it could be tactical setups in terms of trading rules itself or in terms of your psychological rules. I will never go late into the market. If the market opens at 9:15, you will ensure you are there before the market open. That could be your rule. Or for whatever reason, if you miss a trade and if it is already into the position and if it has already gone certain distance, then you should not be desperate enough to enter into the trade. Just because you have missed the bus doesn't mean you will run and enter the bus again. You will let go of the bus and wait for the next bus. You always have capital at your disposal. So even if you miss this trade, you are only losing the opportunity, that is called as opportunity cost, but you will not be damaged because of late entry. What is important in markets are like, timing is very important. You would have seen so many quotes by so many people. Timing is very important, especially if you are a technical trader, especially if you are a trader of any nature. What matters is the timing, not the time. If you're a long-term investor, all those fundamental investors or the fundamental analysts, they always advocate on the time. Give time. Do not sell. Wait for 3 years, wait for 5 years, wait for 10 years, wait for 20 years, wait for your lifetime. that will start giving you returns, or that will become 10x, that will become multi-baggers. So these are the stories which the fundamental analyst or a fundamental investor will talk of. But when it comes to a trader, for him, time is one of the important resources. Time is money, and timing is very, very important when he enters. If he enters too early, then he has to wait for a long time. He may not, and in the meanwhile, he might miss other trading opportunities. If he enters too late, the trend might have already been over, and he may again get caught on the wrong side, and the trend might start reversing, and he will not know whether to exit or whether to stay put. So these are all the dilemmas which any trader encounters. So what is important is have certain rules. Today we are talking of what not to do list. You should have a what not to do list. Do you have a, as a trader, what not to do in my trading activities ever? Have those lists written down, and then you see how your trading pattern improves, because psychologically people keep doing the same mistakes. It is not that, like, we don't know, but we don't put the hard stop for our bad behavior. We need to put the hard stop for our behaviors which are impacting us. If something is costing you money, stop that. If you are averaging and you are losing consistently, stop averaging. Put a hard stop on that and put a rule saying I will never average out. Even if it sometimes it might be of a positive outcome, you let go of those things, because you have already hurt many a times before with that behavior. Human psychology is repeating the same type of patterns. Once we get into a good habits, we will be repeating the good habits. Once we get into the bad habits, we will be repeating the bad habits. We also see, like, history repeats itself. Same way human behavior also keeps repeating, and we keep doing the same thing. So we have to observe ourselves and see where we are going wrong, and certain things, if it is impacting us, then we have to stop that. In fact, in yogic practices, there is a very nice saying. The Ashtanga Yoga, they say, like, the first two aspects of Ashtanga Yoga are Yama and Niyama, which also talks of, like, Yama means must do things, what are all must do things, or Niyama, what are all must not do things. So yogic practices starts off with Yama and Niyama. That is as part of your Ashtanga Yoga. So very similarly, even in our lives, we need to at all times have must do things and must not do things. That's very important. And you see, have those lists written down, and every day practice those affirmations, and then you see how your trading patterns can improve. We will see with one other topic tomorrow. Until then, Om Swasti.